power of setting up a good board of directors, avoiding common traps.
Welcome.
Thank you very much, and nice to see you again, my friend.
Nice to be seen. So we're going to hit the topic in general, of course, but like I mentioned during the last panel, it's good to get a background on people. So tell us about yourself, what you're working on, but also tell us about your journey into crypto and blockchain. Not super long, but it's always good to get some context.
Yeah.
So please.
So originally coming from traditional finance, I worked with a big hedge fund as a trader. And then I started my journey in the crypto world back in 2013, co-founded the second ever crypto company in Switzerland. Saw firsthand how the boards work and how the boards are formed in that context. I did an exit from the companies called Lickem and then launched 3 more companies. 2 of them were regulated, actually. So one was a crypto market maker, one was actually a banking service provider, and a co-working hub. And I did an exit from 2 of them in the summer of last year, and now I'm a venture partner at a VC, which for board matters is a bit, you're now on the other side of the board discussions usually.
Interesting, yes.
But I also run a DAO in Switzerland, so it's a decentralized autonomous organization with a legal wrapper as a Swiss association, which again, it's a very interesting question of boards in decentralized entities, and this is kind of a little bit my journey, where I come from.
I'll add that I'm going to claim some credit. So a project I was involved in Casper was one of the first pioneers of using a non-profit member association in Switzerland as a wrapper for a DAO. What had happened previously is that companies were using foundations or just not doing anything, and we came to the conclusion, and it sounds like you did also, that the Swiss unincorporated association is the closest DAO-ish type thing. And the key idea is that you do not have general partnership liability. You under normal general partnership, if you don't form an entity and you form a general partnership, every partner is liable for the debts and obligations of any other partner. So I applaud you for reaching the same conclusion I did.
We spoke to good lawyers, which are very much needed in the crypto industry.
Exactly. So one thing I caught from what you just said is you had an interesting transition from being a founder or a co-founder and kind of having a board inserted on you maybe to coming in from the VC angle now and kind of acquiring your seats from the founders. It's an interesting reversal of perspective. But tell us about your first startup experience. You meant where you had this sort of board issue, and what was your experience at the beginning, and then we'll kind of get into the evolution of your point of view.
So my experience with how boards are formed at startups is there's actually usually turning points in the growth of a startup where either the situation demands a board or the investors actually demand a board. So, for instance, if you get your first serious investment, so I'm talking not about the pre-seed, even seed stage, but if you're talking about Series A investor, it's very natural that for governance reasons, the investor demands a board seat. So this is a very, very standard setup. Actually, and this is how I have experience with my first startup, is that after we have raised substantial amount of funding, is the moment where the non-founder board members were becoming the investor board members. So basically that means, we had a couple of people who chipped in a lot of money, who had institutional background, and they demanded basically a board seat. So it was really straightforward as that, actually.
Now, let me pause you for a second. You made an interesting distinction between an investor-originated board,
yes,
which I'm familiar with, but you also said something kind of subtle, which is sometimes the situation requires it, and you're playing that something separate or additional to the investor requirement. What do you mean?
So, for instance, I can specifically refer to an specific example in Switzerland, is when you want to become regulated or licensed, many times the governance practices demand that you have an independent board member, or if you go for a fully licensed route of being a bank, for instance, you actually have a fully independent board. So this is the gold standard in Switzerland. If you're a banking licensed bank, welcome. So if you're a licensed bank and you want to get a banking license, the FINMA, the Arcane regulator, will ask you to have an independent board. And this is kind of like this is actually one of the examples. But to give you another example as well, is like in Switzerland as well, when you form the AG, I don't know how it translated, like a shareholding company.
Aktiengesellschaft, publicly held company.
exactly. So when you're a shareholder...
Are you impressed? Bist du beeindruckt mit mir?
Du sprichst sehr gut.
Natürlich. Aber weiter auf Englisch.
Yeah, he speaks German very good. So when you actually create a shareholding company, by law, you need to have a board. And usually when you are in the early days of a company, for instance, you would actually have the founders would be the board members, actually. This is pretty much actually the setup. So these are some of the reasons why you would want to have a board and why would you want to have non-founder board members, actually.
Fantastic. Now we're going to expand our intimate fireside chat and make it less intimate. Reuben, thank you. I'm glad you made it. I know from personal experience, traffic is hell. So it is what it is. What I mentioned before is, of course, we want to know who you are, what you're working on now, or the company you're with now, but also what was your entry point into crypto and blockchain? Just give us a little bit of history about yourself as well, please.
Okay, thank you. Apologies for being late. Yes, we've been in the crypto sphere since the very beginning, when it started to get regulated.
You're Satoshi?
Pardon?
You've been since the very beginning?
Beginning in Malta.
Okay.
So GTG is a law firm. We specialize in technology law. Gaming is one of the areas, fintech, but also the crypto space. At the time, we were virtual financial asset agents, where we would actually put forward applications for crypto licenses to the Malta Financial Services Authority. Since then, we've been heavily involved in the crypto space. We're also assisting the government of Malta with the transposition of the local laws in order to be in line with MiCAR from a European standpoint. So we're quite active in that space.
I just had this discussion in Barcelona, actually. I guess the MiFID is a directive, but MiCA is a regulation where it actually needs to go into local law.
Yeah, exactly. So MiCAR is a regulation. So from a European Union law point of view, a regulation means it is a law, notwithstanding what amendments you do in your local legislation. Yeah. But you're still expected to change your local legislation to carbon copy what the MiCAR is.
Interesting. It's a little bit off topic, but I thought it was interesting how the EU works. So let me ask you. So one thing we were just discussing before you joined us, Anton was relating two things: his entrepreneurial experience. On one hand, he starts off a founder and then sort of had board members imposed on him. I'm using that as air quotes. And he's kind of now graduated to the big boys. Now he's a VC, and he's sitting on the other end of the table and inserting his own board members into the companies that are receiving his funding. So he's sort of gotten that switch. And he made an interesting distinction that I hadn't really thought about before, which is there's situations, of course, where investors are going to require one or more board seats to help manage their investment, but there's also situationally required board seats because of regulation or because you're a bank or because it's kind of outside it's a non-investor but important role. So you're a Maltese attorney. Just kind of give us if you like, the Malta perspective on the company law here, and when do boards become independent? Under what sort of context?
Well, now under MiCAR, everything is going to fall under the financial services regulation. So in that regard, you need to have a board composed of a minimum number of directors. The regulation will impose that some of the directors have to be independent directors. So they have to be non-executive independent directors, whilst you might, the promoters or the investors can still appoint their own trusted executive directors that would be part of the business. This distinction is being made across financial services, not only in the crypto space, whereby now we're seeing sort of the crypto industry graduating to the big boys and becoming recognized as a financial services business. And in that regard, the rules of financial services across the EU do apply. So there are elements of corporate governance that need to be taken into account, 4I approach that need to be taken into account. So in reality, if a business wants to be regulated under MiCAR, the mindset has to be that of a financial services company, not any longer as the small startup or the fun type of setup that you had earlier on.
Let me ask you a question that came up before. If you have a company that's publishing software related to blockchain or DLT, and they're purely a software publisher, are they falling under MiCA?
It depends. It depends what they're actually offering. So there are certain tests that need to be carried out in order to ascertain whether what you're offering falls under a digital asset, a digital financial asset, as defined under MiCAR. And then there may be instances where you're just a pure software delivery support function and you don't need to be captured by MiCAR, but it depends what you're offering.
All right, very good. Now let's come back to the board topic. So give us the legal definition, either of you, of what makes a board director independent, and then maybe if you want separate from law, what does it mean practically? What gives someone true autonomy, and what does an independent board bring, and what problems does it bring?
So I think you make a very interesting point is that when you have board members, they actually might have competing or views actually what the board is supposed to do. You make a very good point now, because if you're an independent board member, you would say you are there to strengthen the governance, to bring an independent voice, to actually notice conflict of interest. If you're an investor, you would say, I'm there to supervise and fire and make sure my investment grows. If you're a founder, you would say, I'm emotionally involved and I want to make this a big success story. I want to do a big exit. So it's very different, like who you are, how you see the board actually. And in the context of independent board members, if you ask me what makes you an independent board member, in Switzerland by law, it's not so strict in a sense what it means, but it can basically mean that you don't have substantial shareholding. So this would be the first point. You are not a substantial shareholding, and you actually do not, in the soft sense, are perceived to have a huge upside from the shares of the company, from the shares of the company appreciating. So this.
I'm going to pause it because I'm going to dig in that. That was interesting. So under this definition, the board members representing an investor are not independent.
They would definitely not be considered independent board members. So if you are even appointed by a venture capital investor or a private investor so you're their appointee on the board, in the eyes of how I have experienced it, will not be perceived as an independent board member. So literally somebody who doesn't have shares obviously has the competence of the industry where the company is operating. And it's extremely important to mention. You cannot just appoint somebody who doesn't have shares or doesn't have substantial shareholding, but he's not an expert in the field of industry where the company is operating.
Now, let me tease the second part, and then we'll pass it over here. I'm just thinking management theory and agency theory. If you have a board member that does not have a lot of shares, is merely, say, collecting fees, I'm a little bit concerned about the other extreme, which is their interests are not aligned economically with the success of the company necessarily.
This is about what I was about to add actually, is now you have actually a problem that I have seen firsthand actually in my experience, is that you have a key stakeholder on the board who actually, just to say it out very directly, doesn't want to take the same risks as the rest of the boarders want to take. Because everybody else on the board there is to make money through the price appreciation of the shares, basically. And then you have a board member who says, I am there to make sure that nothing happens to the company, but also that
sometimes they just make sure nothing happens.
Nothing,
right?
But I think from my experience, nothing happens to the company, nothing happens to them, because they have actually huge downside. You as a board member have a huge liability. In Switzerland, for instance, you are personally liable with your wealth if something goes wrong. So imagine you're sitting on the board of an up-and-coming, fast-growing startup. Everybody's saying, let's do it. We need to take more risks. Now is the time to do it. And you're saying, I don't want to take risks because I don't have the upside, actually. So this is the extreme of I made it sound like an extreme of having an independent board member. And I can tell you from my experience, the risk is real. So the risk of having that kind of board member is real because they just don't have the same upside as you, meaning that they're not aligned in the same way as you or a VC investor is.
Interesting. So, Reuben, give us your perspective, but maybe also some board member war stories or anecdotes or caveats, so you can maybe share some experiences with the audience about the good and the bad.
Yes, I do concur with what was said in the sense that a director is independent completely from the promoter, from the investor. Once you have that person on your board, the director does not report to the shareholder. The director is there to safeguard the business of the company to make sure that the interests of the shareholders are preserved, and to also ensure that the business of the other stakeholders are preserved, like the creditors. And there's a very strong legal obligation whereby the director is actually forced to follow. So in this regard, the selection of who is going to be on the board is of critical importance. And there are some differences in your life cycle. So when you are in the startup phase, you might want a certain characteristic of a person that would sit on your board. Maybe a person that is very, very well attuned into taking risk management strategies, so he can understand risk, or they can understand risk as a board. Alternatively, then when you are going and growing in your life cycle, then you need to have more institutional directors that have experience, maybe from investment banking, etc., that are there to make sure that the solidity of the growth is there, it's sustainable. I've seen in the past whereby there were shareholders that thought that the directors were actually, their subordinates. And they got really frustrated.
Say that again. You've seen, just repeat.
That the shareholders thought that the directors were their subordinates.
Okay, subordinates. Interesting. Like order takers.
Yeah, I'm the owner of the business. You do what I say. It does not work that way. And if it works that way with the board, there's something wrong with the board. So there's also a matter of maturity of the promoter that has to understand that he or she is giving their investment in the hands of people who are capable. Now, that is why at many a time at startup phase, the founders are also directors, because they are there to influence as well the direction of the company.
Okay, and then how much does personality, you kind of related to it a little bit with maturity, how much does personality or compatibility play a role? And don't just give me like platitudes, but in practical terms, what are you looking for in the human being that you're going to put on your board?
So,
actually, let me put it this way.
Yeah.
I'll frame it a little bit differently. Now you're in a VC role. Now you're planting in directors. Maybe it's yourself. Maybe it's others. What's the character of the person?
So the character or the experience of the person would be ideally that I was actually operating a company at the stage where he is entering. So if he's entering an early stage startup, I can tell you one of the worst situations for a young startup would be that you have a corporate background board member, because you're literally putting that person in a situation where he cannot relate and he cannot understand the challenges of the business of that stage. Or if you actually have a pre-IPO company and you put a person who was an early stage founder his whole life and you put him now on the board, that person is literally lost in that kind of board composition. So I think this is very important what you mentioned. You stressed it several times. There are different stages of the company and you need to have the right character, the right background for the stage. And in my experience, so I think I said it and I was fortunate not to have these situations, but I know some fellow founders who had this situation. They literally would have a person with 30 years of corporate career joining the board of a startup that barely raised $500,000, and that person, is in a new environment and is struggling to understand it. And then you have friction, you have challenges on the board, and having problems on the board is the worst thing an early stage company can have, in my view.
But I'm just thinking it through. That 30-year corporate veteran maybe isn't wasted as an advisor.
Yes,
maybe that because you're kind of seeing where you need to go.
Yes,
maybe that's a good place for them, and then they can transition maybe from an advisory if there's chemistry. And they're getting along, and everyone knows their limits. Maybe as the company grows, he or she can transition from advisor to formal board member. Maybe.
I think this is a perfect advice. Just Gordon said is that you need to get to know your board members. If you're looking ahead, a few years ahead, put them on an advisory board, and they can be close to the company. Get to know them. They get to know you, and when the time comes, you can invite them to become a board member, but at the right place at the right time.
Like a farm team, a little bit.
Yes.
So let me throw it to you. You're obviously an expert on the legalities, but again, I want to throw the character question to you. In your experience as a corporate and transactional attorney, what sort of human beings are best for the board?
Well, if I had to say one big characteristic is that the board, the director needs to understand the culture of the company, the culture of the investor. once that person understands the culture and the vision, notwithstanding what type of approach they would take, at least they would know, they would have a basis from where to start from. If there isn't this understanding, we can put in, a director from the, top corporate banks in the world. It won't work.
Fair enough. And then, how often in real life does the quality of board affect a company's ability to go out and make other relationships? Is the board a credibility factor in real life, or is it just a nice to have, but investors or partners are looking somewhere else?
So having a good board and a reputable board can do magic for a company. This has been my experience, actually. So having people with the right experience, and especially with the credibility, when you are speaking to people, or let's say even like that, when people talk behind your back about your company, if you have great board members, they will actually mention it as a huge, huge benefit for the company. So this is actually how I would interpret it, and I would say it. And to repeat again, if you have a not good fit board in your company, or you have friction on the board, it's one of the worst things that can happen to a company, in my view, actually.
Interesting, but it doesn't have to be that way. You can have a stellar board where you don't necessarily always agree, but the quality of the board, and then maybe the fact they're holding you accountable is a feature. Maybe we're out of time, but do you want to make a last comment?
It is not the role of this is a misconception. It is not the role of the board to seek investment, to seek sales. The board is there to govern the company, but the board is very essential because it will allow those people who are trying to raise funds, trying to sell, that they have the credibility of a very strong board. So this is something which is unfortunate. There's a misconception that you put in, a rising star or a superstar on your board, and you expect that board member to sell your business. It is not the role of a director.
But it's sort of a passive sale, maybe, if it's a quality person and everyone knows that they wouldn't be involved unless...
Passive, yes, but not expecting them to be like salespersons for your funds.
Right, I agreed.
Just to add, actually, so when you're doing fundraising, actually, the good investors will definitely want to talk to your board. So, in a sense, I agree with you. They're not doing the fundraising. They're not doing the sales. I agree with you. But when it comes to fundraising, professional investors will come and say, I want to have a call or a meeting with your board as well to get to know them, because they're entering into a marriage, actually, with them.
And there is where the independent board members become very key.
Fair enough. Okay, we're out of time. I want to thank you for this wonderful fireside chat / panel. Let's give a big round of applause, please, for our panel.